This conference will now be recorded.
Okay, so we are working with the accounting cycle. And in terms of working with the accounting cycle, we started with steps 1, analyzing transactions and making journal entries. Then we moved to steps 3 and 4, posting to the ledger and preparing the trial balance. We're skipping steps 5 and 6, adjusting entries for now. We'll come back to it later. And we're doing steps 7 and 8, preparing financial statements and closing the accounts. Preparing financial statements and closing the accounts. And so our goal was always to get to preparing financial statements and closing the accounts. And so that would be your midterm exam, going from steps 1 through 8 with Excel spreadsheets. And we talked about making journal entries, and I gave you about 20 types. The first 6 cash comes into the business, we debit cash. 7 through 11, cash is paid out, we credit cash. So you always are making that distinction. Then we have others that do not involve cash, such as purchasing an asset utilizing debt. We'll start to look at some of these others, such as recording depreciation, sale on account. We work with that one. And so we'll begin to pick up the other 20 types as we go through the remainder of the course. Then you have this chart of accounts, which you're always working with to make sure you identify 2 accounts for every journal entry, something with a number by it. And we have the normal balances of these accounts. We began to talk about retained earnings a little bit last time, and we said that is an important account because it tells whether the business has made money. This account, when it has a credit balance, means that the company has made money. If it has a debit balance, then the company is not doing well. Every account, 455 dividends, all the way through 705 loss on the sale of long-term assets, are temporary retained earnings accounts. We have these accounts so we can prepare the financial statements. Once we have prepared the financial statements, we close out all of these temporary accounts because once 2021 is done, then we got to accumulate the information for 2022. So we could have put all of these charges in retained earnings in the beginning, but it would have been very difficult to prepare the financial statements. So we've made journal entries, debiting cash and crediting common stock. We've made all of these journal entries all semester long. So that you would not have any trouble making a journal entry. Then we post it to the ledger. Then we prepare the trial balance, making sure both the debit and credit sides are equal. And now what we want to do is to get the financial statements prepared. And there's no exact format, but an income statement shows revenues, less costs, less expenses. That's how we get the net income. What's the revenue, less the cost, less the expenses. The statement of retained earnings is a simple statement. How much did we earn? How much less were we paid out in dividends? How much of the earnings we kept in the business? And the final statement that we're working with through midterm is the balance sheet. A balance sheet reflects the accounting equation, assets equal liabilities plus stockholders' equity. Therefore, total assets must always equal total liabilities and stockholders' equity. When that happens, you know you're in balance, or at least you balance everything you've done so far. We have a balance sheet at the beginning of the year that tells us where we were. Then we have to have the income statement which tells us what happened in terms of income. We have a cash flow statement that we'll look at the midterm, which talks about how do we spend our cash, because that becomes important in running a business. Then we have the statement of retained earnings, which tells us how much income was retained in the business. Then we get to where you are. So where were we on January 1st of 2021? What income did we have in 2021? How did our cash look in 2021? How much of the income that we retained in the business? And then where are we at the end of the year? We had income. How much cash we got now? How much do we have in receivables? So that's what we're trying to show. That's what we're trying to show. Now, once we've prepared these financial statements, we do not need any of those temporary accounts that are below the line anymore, because they've got to go and do their work next year. They're temporary retained earnings accounts. The permanent accounts at the top of that T accounts listing and in your ledger. The temporary accounts at the end. And so we must close out all of the temporary accounts. As indicated, it's just like the balance on your tuition and fees. Once you pay it, the university closes it out because they need to start again next year doing that. Well, it's the same thing with revenues and expenses and dividends. Once the year is up, we close them all out to retained earnings, and then we start anew. There are 4 closing entries. In closing entry 1, we close the revenue. Okay, so we're closing the revenue by debiting revenue and crediting income summary. Closing entry 2, we're closing the expenses. We debit income summary and credit expenses. So now all the revenue accounts and all the expense accounts are closed. Then in closing entry 3 is when we close the net income, our loss. If we have a net income, we debit income summary and credit retained earnings. If we have a net loss, we're going to debit retained earnings and credit income summary. So it reverses when there's a loss. And all A students should know that. The 4th closing entry, we close out dividends. So every company in the world does this. They close out their accounts. All governmental entities close out their accounts so that everything is clear for the next year. Are there any questions? Okay, so let's put trial balance exam 2 up to date, which you were supposed to work on. So, Christopher Wallace, what's the first journal entry? Just give me the type and the accounts and amounts. Just tell me.
Okay. The type is a 1, and it's cash and common stock.
So we're going to debit cash and credit common stock. Okay, but let's see the second one. Valenciana,
Can you hear me?
hear you now.
Oh, okay. So for number 2, debit's going to be inventory, and for credit, accounts payable.
Okay. Brittany,
For number 3, it's going to be dividends and cash, 455 and 120,000, and it's a type 10.
how much?
Sorry, 20,000.
Okay. That's a type 10. Okay. Thibodeau, number 4. Well, Ross, why don't you help him out?
I have type 7 and 12,
Okay.
and land cash and notes payable. And the account number is 200, 100, and 350.
What's that journal entry going to be?
For debits, I have 150,000. That's with land, and then for cash, it's 50,000. It's credit. Notes payable is 100,000, and that's credit as well.
Okay. Then Richardson, number 5.
Can you hear me?
Yep, I can hear you.
Okay, for number 5, I got rent expense cash. That's 651 for rent expense, 100 for cash. You debit 2,500, credit 2,500, and then it's type 9.
25,000. Okay. Okay. So Pickens, the next one.
So I put a type 9, and it's sales, salaries, expense, and cash, and then it's 50,000 for both of them.
Okay. So Keith Pickens now. Okay. Go ahead, Pursley.
What number was it?
I think we're on 7.
7, yeah, 7 would be accounts receivable, 250,000 debit, and then sales credit 250,000, type 15.
Okay. Actually, we're going to what's about the next one, number 8.
You said my name, sir?
Yes.
Oh, okay. Number 8 is type 8, accounts payable and cash.
Okay.
150,000 each.
Okay. Number 9, Neely.
You hear me?
Yes.
So number 9 is the type 3. It's gonna debit cash, credit account receivables for both 200,000. Cash is 100. Account receivable is 110.
Okay. And for our final one, Karina.
So for number 10, the type is 8 and 9. It's notes payable, interest expense, and cash. And 20,000, 10,000, and it equals 30,000.
Okay. So are there any questions on any of these journal entries?
I submitted the wrong assignment. I was just trying to see if I could resubmit it.
Well, we're going over it now, so we'll talk about that.
Can you go over number 10 real quick, sir, please?
Okay. So here are the journal entries. And in number 10, we had to pay the principal and interest. It's like if you have a student loan, you pay back what you borrowed plus an extra amount for the privilege of borrowing. So the company had to pay back notes payable 20, interest expense 10, and they credited cash for 30,000 because that's what you had to pay back, 30,000. 20,000 notes, 10,000 interest. The credit to cash is 30,000. The payment on the note payable is type 8, payment of a liability. The payment on the interest expenses is an expense because you're paying more than you borrow.
Can you move your screen over a little, sir, please?
Right or left?
It's move it towards the right, please.
Is that better?
A little more, sir. Thank you, sir.
Okay. So does this work better for everyone? This location? Okay. Well, I guess it is. So thank you, Danny, for letting us know. So we'll keep it here. So you should have posted all of these transactions. Like debit cash, 200,000. Credit common stock, 200,000. So I'm assuming you can post. I'm assuming you can post. And now we're going to go to the trial balance. So this is our trial balance, balancing out at 580. So if you posted all those transactions and prepared a trial balance in the correct order, this is what it would look like. Okay. Are there any questions on the trial balance? Okay, so Brooke, tell us about the income statement. If you had to prepare an income statement with this information, what would you do?
Put 250,000 in sales. Is that what
So
we're
the
doing?
first thing she said she would do would be to put 250,000 in sales. And there's no return, so our net's 250. So her gross profit is 250. We'll get the inventories later. What else would you do, Brooke?
Take the operating expenses and copy and paste them.
So these are the operating expenses here. And we said that the income statement is going to consist of everything from sales on down. So we can copy these numbers and put them in here. And we now have an income statement. Okay, for the expenses. So we add these up, what do we get?
85,000.
So the total expenses are 85,000. And if we subtract those from the sales, what's our net income?
105,000.
Can everybody prepare an income statement now? Can you go put your trial balance in the right order and go from sales down and do an income statement? Is there anybody who cannot do an income statement now? All we did was work with these accounts, sales, revenue, less the expenses, net income. That's all that involves. Okay. Let's go next to our statement of retained earnings. So Ruth, tell us about the statement of retained earnings.
I didn't get that far.
You didn't get that far?
I'm still working on that one.
Melanie, did you get this far?
I don't even know how to do that.
Do you know how to do an income statement though?
No.
Come on, Melanie. Can you do a trial balance?
Yes.
So all we said on the income statement, and it's good that you're honest, because that will. If you put the trial balance in the right order, assets, liabilities, got this a little out here. Notes payable should be above common stock, then retained earnings here. All you got to do is to look from sales on down, and that's your income statement. The revenue goes at the top. We subtract the expenses. We have an income statement. That's all we did. We put 250 at the top. We subtracted those three expenses, 85,000. Net income was 165. So don't make that hard. Just say, okay, I can do that. Okay, so let's go to the statement of retained earnings. So, Okay, Lee, go ahead and give me the statement of retained earnings. Can you do that, Thon, Lee?
Me?
Yes.
The I put the 0 at the beginning. Retain
Getting a 0, that's correct.
and the net income is 165.
Okay, so 0 here. So we just bring this net income down, 165.
The subtotal is 65.
165. Then what do we do?
And less dividends is 20.
So this dividend up here was 20,000. So we're gonna put that in here. And so the ending retained earnings is what?
Yeah, 145.
145. So what this statement is telling us is that we had net income of 165,000. We paid out 20,000 in dividend, and so we got 145,000 left. See if I can make this 160. Acting up, okay. Are there any questions on statement of retained earnings? That's how it's done all the time. Beginning retained earnings 0 when we have a new company. Add, bring down this net income from the income statement and put it here. Subtotal net income, we subtract the dividends. Ending retained earnings is 145. Are there any questions? So that's the easiest statement to do. Okay.
Pardon me, sir.
Yes.
Do you mind going back to the journal entries, please? I use Google Sheets, and then when I tried to convert it to an Excel, all my stuff just got mixed up or deleted, and so the assignment that I had submitted, it is not even it's halfway done from what I can tell. But I completed the assignment on my Google Sheets, but when I did the conversion, it completely messed up all my information that I had put down.
Well, those things happen. So, we worked on it, to show like, so I'm not concerned about that. If that happens. And always, if you've done an original submission, there's a technical issue, then you just simply resubmit.
Yes, sir.
So these are the journal entries. Do you have them now? Or can you take a picture of them?
Yes. Can you go a little more to the right, sir, please?
More to the right. Let's see if I can.
That's a little too much to the right, sir.
Oh, I went too far to the right. How's that?
Right there, sir. That's perfect. Thank you, sir. I got the picture there.
Okay. Let me ask now, for the other folks in the class, does this work better? This location?
I mean, it looks fine where it was.
Yeah, you know
Okay.
you can like drag your screen and move it yourself.
Say what now?
If you
You
like
can zoom
touch
in
the
and drag your
screen, you can move
screen.
it yourself. Yeah.
Okay, so you're
Sometimes,
saying,
sometimes I can't see it all the way though.
okay. Well, it depends on like I say, what hardware you're using. But yeah, most times you can adjust the screen, make it larger, smaller, whatever. But you want to make sure it works for everyone. So
Could you go to the
Okay.
T accounts real quick?
Say what now?
Could you go to the T accounts real quick?
Okay, let's go to these T accounts. Is there any particular T account? Well, the most important T account is cash. It has the most activity in it. And so what you want, take a picture of the cash one and go from there, okay?
All right, yeah, I got it.
Got it?
Yeah.
So I'm just assuming that everybody can put those things in the T accounts and then balance them out. And like I said, the one with the most difficult is cash. Just take a picture of that one. Going back to our financial statements. Can everybody prepare an income statement now?
Yes.
Okay. Can everybody prepare a statement of retained earnings?
Yes.
Yes.
And it's always going to look just like this, except that you may have beginning balances, okay? But on a new company, we don't. We'll get into that later. Now we want to do a balance sheet. And what I did with the balance sheet, we're doing it December 31st, but I went in and pulled in that chart of accounts in detail. So you would always have the accounts and you're simply filling in to get total assets, pulling the appropriate accounts, the liabilities, long and short term, common stock, and retained earnings, and you subtotaling the liabilities and stockholders' equity and getting a total, and this total has to agree with the total asset total. So everybody can do an income statement now, and everybody can do a statement of retained earnings now. Let us go through so everybody can do a balance sheet. Okay. So we want everybody to be able to do a balance sheet. So, Harvey, tell us about a balance sheet.
I didn't. I don't know about a balance sheet.
But tell us what you do know if you're preparing one.
When I'm preparing one,
If you were going to prepare one from this trial balance, what's the first thing that we know? We're going to come across here and we're going to put it in red. And we're going to say everything from retained earnings up goes on the balance sheet. Everything from sales down goes on the income statement. Everything from retained earnings up goes on the balance sheet. Does everybody understand that? So now
yeah, I understand now.
So now you see why my focus was so much on get these accounts in the right order, because we were coming to this point and it's going to make it simple for you. So the first thing we do is go to these assets. We need to put these assets on the balance sheet. So we start at the top on the left side with the assets. So we're going to do the balance sheet. Go to cash. What am I going to put right here? What am I going to put?
75,000.
75,000.
How much?
75,000.
75,000. Whatever's in the cash account, we're gonna put here. And then what's gonna go right here?
50,000.
The receivables amount, 50,000.
Is this
Then we're gonna drop down to the inventory. How much is the inventory?
200,000?
And so these are all the current assets that are cash or that we expect to convert the cash in 1 year or less. So if we total these up, how much do we have?
325,000.
325. Then we have one non-current asset, land. How much is in the land account?
150,000.
How much?
150,000.
150,000.
So what's our total long-term assets? 150. So what are our total assets?
475,000.
Well, this is a smart class here. All we did was take the numbers at the top of that trial balance and put them over here where they go. Current assets, long-term assets. The current assets converts to cash in less than a year. These long-term assets typically are going to last longer than a year, so we separate them. You now have the asset side of the balance sheet. Now the next thing we're going to do is go pull in these liabilities. We got to pull in accounts payable and notes payable, a little out of order here. But the accounts payable is how much?
50,000.
50,000. So that's all about current liabilities. And our long-term liability notes payable is what?
80,000.
And so our total long-term liabilities are what?
80,000.
80,000. And our total liabilities are what?
130,000.
130. Okay, now let's go to stockholders' equity. Our common stock is how much?
200,000.
So it should be 200,000. And our retained earnings is how much?
145,000.
And
Don't we have zero up here?
Yeah.
And if we were to put that zero in, what would happen? We would not be balanced, would we? Because we'd have 200,000 here. So we'd be at 330, but we got to be at 475. So how do we get to 475?
You add the retained earnings.
We have to come and get this 145 ending retained earnings. So not the beginning zero, but the ending, and put that in. And so now this number becomes what? 345.
Oh, 345.
And total liabilities and stockholders equity now equals what?
345.
But this is 345. But when we add these two numbers, how much do we get?
475.
So now we're in balance 475 with the total assets. So when we do a balance sheet, what are the assets and what are the liabilities and equity? The two have to equal. So there's nothing overly difficult about these two statements. You just got to, the trial balance is the big hurdle. Once you get the trial balance, you simply move them where they belong. Now, in actual practice, a company only shows the income statement and the balance sheet, statement of retained earnings. You don't ever see the trial balance back. But now you know what they're doing. And that can be important because eventually you're going to have to make the decision, are these financial statements good? Would I invest $1 million with them? Are they not? So we're getting the financial statements prepared. Are there any questions on this balance sheet where we simply went to the top from retained earnings on up? But instead of using 0, we put in what? The new ending retained earnings of 145. So I just got that over here. And when we do that, all of these accounts are closed out. So the 145 is the summary of all of these accounts. Can we all get a balance sheet done now?
No.
Why not, Lauren? Basically, what we've done in a simple case, for retained earnings, everything above it on the left, we put them on the balance, we put them as assets and came up with assets. Everything on the right, the credit column, we put them, in this simplest case, as liabilities and stockholders equity, and we got them to balance. So look at that and work with it. But the hardest part are journal entries and getting the trial balance balanced. After that, it's just plugging in. Now, as we said, retained earnings has a 0 balance. We've got to get it to 145. So that becomes the purposes of the closing entries. The purpose of the closing entries are to close out all of the temporary accounts and get the balance in retained earnings. We want that balance in retained earnings, which was 0, to be 145. So Harvey, what's our first closing entry? All right, Trey, can you help her out?
Would it be the sales?
That's correct. Already got it up here for you. So to close sales out, what are we, and see, I put them here, so it'll be easy for you to make these entries. And all you got to know is we got what? Debit sales, 250.
Okay.
Credit income summary, 250. Okay. That's closing entry 1. Now we do have to post these, so let's go down to accounts. And we already got them posted, so I'm gonna go in here, go in this box here, put Roman numeral 1. Then I'm gonna go over the sales. And I'm gonna put, I got no box over here. these in red. That red's too much. Okay, so I've got the Roman numerals down, so hopefully you can see those, that instead of using numbers, I'm using the Roman numerals, and that's closing entry 1. So let's go to closing entry 2. And once again, I got it set up right here for you as we close out these expenses. So Ellis, what we're going to do here?
For income summary, it's gonna be 85,000.
We're going to debit income summary 85,000. And what we're going to credit?
50,000 for salary expense.
Guess they kind of out of order a little bit, but all we have to do is copy these, right?
Yes.
They're out of order a little bit and then paste them. I'm just showing you the easiest way to do it. So once we've done that, then we got to post number 2. So we're going to go back to the T accounts, and I'm going to have in salaries expense, I guess I need this credit here. So this is closing entry 2. Salary expense. We got to go to interest. Closing entry 2. And where's our other expense at? Another one somewhere. What's our other expense that we're missing?
Rent.
Rent and interest. I think you're missing rent on there.
Okay. How much was the rent?
25,000.
That'll be. So the balance in the rent in terms of taking to the trial balance would have been 25,000. So this is the closing entry amount here. And I'm going to go over the income summary and put in Roman numeral 2. So that's closing entry 2 that we posted. So once we make those postings, all of these other accounts over here now are zeroed out. They all zeroed out. Let's go to closing entry 3. So in closing entry 3, we said that's going to be what? Daniel?
The income summary for 3 is 175,000.
No, see, I put it right here by the net income. And so all we're going to do, we're going to go to this net income line, and we're going to debit income summary for how much?
Whatever you said it was, sir.
The net income, whatever's on that net income line, 165. We're going to credit retained earnings for 165. So that's why it's located right here. That's the reason for it. So you look over here, closing entry 3 is always the net income. So now we go back to the T accounts and get that posted. So when we post that, we put as closing entry 3. Now we've got an entry up here in retained earnings. See, we don't want, because this is telling us whether the business is profitable or not, we only want to see 2 entries up here, earnings and dividends. We don't want to see anything else because we don't, investors and people who are looking at this need to be able to rely on it and make sure there are no mistakes. So now we got every account closed out except what? What final account do we need to close out?
Dividends.
You got to close out dividends. So we come to dividends. What we're going to put right here as a debit to retained earnings.
20,000.
We credit dividends because we're closing it out to retained earnings. So we go back to the T accounts and we go in here and we credit dividends. So this is closing entry 4, closing entry 4. And now 165 on the credit side, 20,000 on the debit side moves us from a 0 balance in retained earnings to what? 145. And where else do you see that 145 at? You see the 145 on the statement of retained earnings, and you see it on the balance sheet. In retained earnings, that same 145. So we know it's 145. The closing entries move it from 0 to 145. The closing entries move it from 0 to 145. Okay, let me get retained earnings in back. Okay. Okay, so that's what I was trying to show here. So still moving retained earnings.
You put the color in white, so it's gonna show up white. It's there.
Is there? Oh,
Yeah, it's there. It's just showing up white.
okay. Wait a minute. Okay. Thank you.
You gotta highlight it and then change the color.
Okay, so let me just see if I can get it red. So we're indicating that everything up goes on there, but that balance is 0. After the closing entry, it goes to 145. So good thing I have some Excel helpers in here. So that's what the closing entries do. Are there any questions?
What's the retained earnings, sir? I'm sorry.
The retained earnings is
On
zero
the closing side, sir.
but at the end of the year it's going to be 145. And all of these accounts are going to be closed out. I got them in red. I don't know how to scratch numbers in Excel. I can scratch them pretty good in Word.
No, I meant on the number 4 part, all the way to the right.
That's the journal entry. So let's just see if we can. You are making 4 journal entries. After those 4 journal entries are made, beginning retained earnings will no longer be 0, okay? It will no longer be 0. Right now, retained earnings is 0. When these 4 closing entries are made, retained earnings will be 145. So that's what the closing entries do.
Can we do all this again on Thursday? Because I noticed that you changed some of the numbers from the original time we had worked on it, and then me trying to convert it to Excel threw all my numbers off, and so now I don't even know exactly what I'm looking at. So I would need help doing this one more time, please, like all the way through.
Well, yeah, we're going to do it all the way through again next time. But we're going to do it on financial statement. What is that? Trial balance quiz 3. So what you're required to do, and what I'll do is I'll just put this in course content. So I will put this worksheet in course content so you'll have it. Okay?
Can I resubmit the thing still? Cause it only show like I did like 3 journal entries on here and that's it. Versus like everything that I did do.
All right, so if it shows that, I'll let you resubmit it. We'll handle that. But what I'm saying is that, let's see. My trial balances. Okay, so that's 2. Where's 3 at? Here it is. So next class period, you're supposed to bring to me trial balance exam 3. And yes, we'll work it, but you've got to work on it before we get here because I'll be starting with the trial balance. So you need to have made the journal entries, posted it to the ledger, and got a trial balance. At the same time, for trial balance exam 2, I'm going to put it in course content. So therefore, you will be able to see the entire problem that we worked today, and you'll have the recording. Are there any other questions? So how many people are going to be able to work trial balance 3 out on their own for next time?
Like all the way out?
All the way out.
I might can.
We got it.
I got you.
That is, how many people want to exempt the midterm? Maybe I should ask that way.
I ain't taking no midterm. I'm cool.
Well, so we have it. Those who can get it all done.
Is we gonna be back in class on Thursday?
Next Tuesday, then you exempt the midterm. If you don't, so then I get those folks out of the way. Then I'm just working with people who I need to work with. So there's two reasons I do that. They can go on and move on. Then I can put more attention and time where other people have problems. So not a big deal. So so you know now that you've got to do trial balance 3 for Thursday, 2:30. Trial balance 4 by next Friday. Then trial balance 6 is due on the following Tuesday. Trial balance 6 is due on Tuesday. So on that one, it's a little more involved. When you can get that one done, then you'll be ready for that exam or the quiz that will be on next Tuesday. So we'll just see, if some people there and they're, we'll work through it with them and they can begin to work on their 70 journal entries. So they won't be bored. They're ready to work on their 70 journal entries, of course. Other people will only be working on, got 40, so it's not 40 anymore, but it's going to be at least a dozen more you will do. But people who exempt the midterm will be moving through the other 70. So, something for everyone. So are there any questions?
For the 70, we got to do like the whole retained earnings and all, like everything we just did, or just the trial balance statement, T accounts, and journal entries?
Everything. That's just for the people who are doing 70.
Yeah, I know. That's why I was saying that's to not do the midterm.
Yeah, that's their midterm. But if you don't want to do that, then you got the regular midterm. But you've got to be able to demonstrate it on next Tuesday that you can do all of this on about 15 journal entries. Okay.
Can you make the balance thing we're doing on Thursday? Can you make that due at the end of class instead of the beginning of class, sir?
Well, what I'm trying to do is to get you to work on it. I'm not concerned whether you got it right or wrong, but I'm concerned that you've worked on it and you're pretty much there by the time we get to class.
Yes, sir.
So I'm just going to grade it holistically. If you got an error here, issue there, that's not the point. The point is that learning process is going to be better if you all have worked it. Then we're ready to discuss what you worked. Working it and completing it does not help because you don't know, where to have issues. But if you've gone through the whole thing, then you would know. But you might assume, I got it this far, I understand what he's doing, but you don't know if you can do it or not because you never tried it to see where your issues were. So the key thing is, being to the point where we can pass. So, just like the homework you did last time, we just grading that holistically and very generous. But the learning process, most people could do the trial balances and balanced out because they tried prior to class. So this is the same way. if you go and you work on this, and you all have the ability to do this. After the day, I guess I didn't get a chance to look at all of them, but I had 15 or so people who had completed that. What we did today, they already had it done. And so hopefully we're gonna move to more and more who are ready to get that done. And you see it, you got the example. You actually, in general, can do this yourself. In general, you're at the point now where you can do it yourself. I have that confidence in you all.
So, sir, you saying if we get all 70 done, from the trial balances all the way to the closing entrance and stuff like that, we're exempt from the midterm?
I didn't quite say that. I said that you will get a quiz on Tuesday, next Tuesday, which determines whether you're exempt or not. So if you can't do the quiz, then there's no need to be planning on doing additional journal entries. That many. You'll do some more, but it won't be that many.
Oh, okay.
But if you begin to look at those 70, we begin to get into adjusting entries and a number of other things. So those folks just are not in class for the midterm, but they're completing the work on that.
Okay.
Those who make that option. Okay?
Yes, sir.
Are we clear on everything now?
Are we still online, sir? Like going forward?
Say that again.